Thank you for joining us today and again this month for our lunch presentation on sales tax audits, managing the process and minimizing liabilities. The last thing any business wants is to receive an audit in the mail. If it's a tax audit, if it's a state and local tax audit, nobody wants that. So today we're going to review and give you some information. You know, we don't want you to get that in the mail, get overwhelmed, stressed out. What do I do? Who do I call? So we'll give you some pointers today. It can definitely be a stressful and time-consuming experience, but we will highlight some of the best practices for handling these audits as we share insights from years of experience, other clients that we've worked with, and assisting your business prepare for them and managing the audit process. We will have some time at the end today for Q&A, so just want to point out the toolbar to the right of your screen. There is a question section. Drop anything in there if you have any questions along the way. And we do have a handout section. There's a copy of the bios of our presenters and experts today, and then also a copy of the presentation. So if you want to look at that or print it and make notes, whatever your style is, go ahead and do that. After our presentation today, you will receive an immediate email with a quick survey asking if the webinar was helpful today, if you want a follow-up call to schedule anything, if you have any additional questions, and then if you're looking for any other specific topics, you know, let us know in that survey. This afternoon, I will send you a follow-up email with another copy of the presentation, a link to the recorded session, so if you want to go back and listen to it, you can, and again, an opportunity to talk with Tom or Caitlin further. So just real quickly, I'm Carolyn Powell, the Development Director here at Tronconi, Segura and Associates. I'll be the host today and keeping an eye on everything. Hopefully I get the slides right and get your questions submitted. Our experts today are Tom and Caitlin. Most of you have heard from Tom before. He's a CPA with over 20 years of experience in public accounting. He has a broad range of industry experience of manufacturing, food, financial services, software, all kinds of good stuff Tom has up his sleeve. And Caitlin is new to us today for the webinar, but has been working with us. She is a CPA and worked for the New York State Department of Taxation and Finance for over 15 years as a tax auditor. She is now a tax manager here at the firm in our state and local tax department. So I'm going to turn it over to Tom to get us started.
Thanks, Carolyn. Appreciate the introduction. It's nice to have Caitlin with us too as well. Got her over from the dark side of New York State. So now she's working with the good guys here, helping taxpayers out instead of hunting them down. So like Carolyn said, we're going to talk a little about preparing for sales and use tax audits today. It's really, you know, what to do to get ready for this audit. I think a lot of the trials and tribulation of audits can be settled a lot easier, a lot more easy if you prepare for them well. Also talk about some, you know, managing that process and, you know, what to do during the course of an audit. And then, you know, afterwards, you know, it's always a good, you know, time to learn, good inflection point to see what you can possibly be doing better with your sales tax compliance. You know, if there's time to talk about some other issues, some of the gray areas that we see these days in sales and use tax. And it's great to have Caitlin here with us today because, you know, you hear from me all the time on the side of sales tax and, you know, from the taxpayer side. It's good to get some insight from the state and what, you know, what are they thinking? What's the auditor really thinking when they come out? You know, they're not out there to get you. They're out there just to do their job and, you know, make sure you're in compliance with New York State sales tax laws and everyone's paying what they need to pay. So I think Caitlin's going to provide some great insight on that today as well. So let's get started here. So everything begins, you know, you get a letter in the mail, you get a call from an auditor basically saying, we're going to audit you for sales and use tax for a certain period of time. This information letter has a lot of good, you know, things on it, a lot of stuff you need to really double check, you know, your name, your address, your EIN, the tax articles, the audit period. You might think, okay, well, that's pretty basic, but you would be surprised. We had an experience once in Iowa with a client where the Iowa Department of Revenue was out. And, after we were looking at things for a few days, we looked at the letter that got sent to the client, and they were auditing the entity that was there 10 years ago. And the business had been sold, and their records didn't match up, so they weren't auditing the right business. So it's always key to look at that. And then when you get this nice package from the state, it's also going to include this information and document request, or IDR, which is like, the Christmas list your kids give you of everything they want, a lot of stuff on it, some of it good, some of it not. And then there's some questionnaires as well. So I'm going to let Caitlin talk a little bit about that stuff, but, first and foremost with, the IDR, it's, you want to look at that and it's like, what's readily available, what requires some work to kind of find and you maybe organize and put together, what's really not that necessary. And I think, Caitlin can provide some insight on that, on the next slide here. Again, this is just what the appointment letter looks like. You can see at the top right, has the case ID, the tax type, the audit period, and your taxpayer ID, which in New York State is typically going to be your EIN. It's going to provide the name of the auditor, who's going to come out. And it's really nice these days, Caitlin, because they provide the name of the auditor, but the whole team as well. Yep. The names and the contact information. So if you have issues, you can reach out to the team leader, the district audit manager, I think all the way up to the program leader these days up in Albany. So, yep. It's really good, gives you some transparency and some contact information if you have issues. So on the next slide, Caitlin, what's on this IDR that, the state really, really looks like they want, and other stuff is not so important?
Yes, so this is the typical IDR that gets sent out, and at first glance, it does look like a lot of information. This is actually just the first page, and there's actually an additional 5 to 6 items on the second page. So it can be a bit overwhelming at first glance, but it is important to note that this is a default list that gets sent out. It's a blanket list that's kind of meant to encompass the records that most businesses probably will have. Not everything will apply to your business. There are some core items that the auditor is going to be looking for, and those include the sales tax returns and backup worksheets, which obviously show how the tax was calculated or how it was derived for the returns. And then there's also some reconciliation items, and that would include income tax returns as well as bank statements. And those are looked at kind of primarily for reconciliation purposes to support what's on your sales tax returns. And then source documents would be another main grouping. That would be your sales and purchase invoices as well as exemption certificates. That shows the detail of what sales you made or what purchases you made, so that the auditor can determine whether sales tax was applicable to those transactions. And then I'd say the last grouping is the control documents. And those are just to check for completeness primarily, and that would include items like sales journals, purchase journals, the general ledger, etc.
So there's also a couple of questionnaire forms that come along with this as well. What are these? I know I always have the auditor, like 2 minutes before we close the audit, say, hey, I need those forms back too. So what are they really looking for here with like the sales tax examination questionnaire?
Good question. So this first one is just a basic questionnaire about the business activities. It asks you questions like, what are you selling? How many locations in New York do you have? Where are the records located? That's just kind of to get an idea of overall, what are you doing? The next one is the responsible person questionnaire. And this asks basically who does what and how much authority does that person have over the business matters as well as the sales tax return preparation. Some taxpayers can be a little bit hesitant to fill this one out because it can kind of feel like you're pinning the liability on or the responsibility on a specific person that you name on this form, but that's not necessarily what it's used for. New York State already has information from when you registered for sales tax on who your officers and ownership of the business are. So if they were to need to make an assessment, I mean, they have information that's already available for that purpose. But what this does is this specifically shows who was or even wasn't responsible for the sales tax during the audit. So this information is important to fill out.
And I think it's good to have that complete and accurate. I mean, I couldn't tell you how many times I've, worked on an audit with a client or like we get this form and we look online to see who they have in their online account as the responsible person. And it could be, 3 different corporate officers ago, 3 different CFOs.
Yes, good point.
And, if you don't adjust that stuff, I mean, and there's an assessment, the state typically will assess the business and the RP.
Mm-hmm.
So you're going to have somebody who may not be affiliated with the business potentially getting an assessment for a period that they had nothing to do with.
Yes.
So yeah, you really need to make sure that you're keeping that up to date online as well, especially if there are changes with the business and that. But, most of the clients we deal with, a lot of the smaller businesses, it's usually just the owner, whoever the owners are typically the responsible parties, but definitely a lot there. So to take a look at. So once you've had a chance to, review the IDR and review these forms, you probably want to contact the auditor. Give them a call, talk about what is this information they're looking for. I'm sure in most cases they're going to review the IDR with you, tell you if they really need to get started. And, depending on how big your business is or how long they're looking back or specific time periods, it may take you some time, to pull all that information together. So you're going to want to set a time frame with the auditor. Hey, I'll get back to you in a couple of weeks, a month, and then, schedule a time for the auditor to come out, depending on how the audit's going to be handled. And it's nice too, the auditors typically will give you, especially if you're not very familiar with how this goes, if it's your first time audit, it's been a while, they'll walk through the audit process with you. But, you might be sitting there saying, oh, geez, what did I do? Like, how come I'm getting audited? I file my tax return every month on time. I pay my sales tax, I'm doing everything right. Like, why did I get chosen for this audit? And Caitlin, give us the scoop. Like, what are you guys doing? You guys looking at a crystal ball in Albany, or or what's going on? How do you guys pick audits?
There's actually several different ways that a business can get chosen for audit. The first being audits of other taxpayers. So maybe the auditor, is looking at sales invoices on that audit and they come across one of yours and see that you aren't charging tax. So that's a way that that a problem could be identified. Whistleblower issues, people can report to the state if they think that you're not doing something correctly. Corporate tax return sales versus sales tax return sales. So this is a reconciliation. The state does several different kinds of reconciliations with the different information that's available. Comparing what sales you reported on your corporate return versus what you put on your sales tax return, if there is a large difference, could signify that there's a problem.
There's always an issue with that too. The corporate return is typically calendar, and your sales tax has that goofy months where it's December, January, February. So you kind of don't have apples to apples in time frame. And it does make a difference sometimes. I've seen. So, you know, it can be an issue. It can be an issue.
Yeah. Consistent taxable percentage. This is basically like if, you know, your business generally reports, say, 50% of your sales are taxable from quarter to quarter, and then all of a sudden your next return shows that you only had 20% taxable sales. I mean, that could look odd, like there was either a change in your business or perhaps there was an error on your sales tax returns.
Yeah, that's key because the state, I mean, they have all this information from all basically different types of different businesses in your industry. So there probably is a general, you know, percentage, taxable percentage per industry or restaurants or whatever. So if you're off of that, I can see them saying, well, hey, something's wrong here. We should probably take a look at it.
Yes, definitely. Different industries are looked at. Similar businesses are often compared to see how one business reporting looks compared to the rest of them that are kind of similar, maybe in the same geographical area or same size, that type of thing. Information from more sources. So many companies are required to report information directly to New York State. An example of that would be insurance companies that are making insurance payments for car accidents. When a repair shop performs a repair and then the insurance company pays for it, those payments are reported to New York State. So New York State already kind of has a baseline for sales sales levels that they would expect to see from a repair shop based on the insurance information that they have. They would know that, you know, not all of the sales are likely to be made up of insurance payments, but that the sales should at least be there as a starting point. Cash credit ratio out of sync with similar businesses. That's kind of something we already touched on. Just how is what you're reporting compared to similar businesses to you?
Yeah. No, and it's true. I mean, we just had a client, they were audited. I talked to the auditor and he's like, oh, well, yeah, you know, their taxable percentage is way off. And I'm like, really? And he's like, well, yeah, for like a Subway restaurant, it should be a lot higher. I'm like, they're not a Subway restaurant. They don't do that. They sell equipment and make repairs. And he's like, well, that's not the NAICS code we have. So there was an issue where the owner had previously had a Subway franchise, closed it, started doing something else, but they never changed.
Oh.
So, you know, it seemed, yeah, they looked at the percentages and they were like, well, you're way off. I mean, so, you know, he wouldn't just walk away at that point and still wanted to audit. But yeah, so no, I mean, it happens. I mean, you know, they are looking at a lot of different things. So there are different ways you can get selected for audit by New York. It's not just your day or getting your name pulled out of a hat this time. So we talked about, you know, why you got audited, but now you've got it, you got to do some work internally to get ready for this. So what we typically do, you know, suggest our clients or help them with, if that's the case, is kind of conduct a self-review, you know, of that information that's on the IDR. You know, let's get our sales tax returns together and our income tax returns, and like, let's run that comparison. Let's see where we stand with that. Is there something that's off? And if it is, you know, can we nail that down? I mean, you might have adjustments on your income tax return depending on the type of business you have. So it might not always line up, you know, apples to apples on your sales tax, your income tax. And even with the bank statements too, I've seen, you know, you've got to take a look at all of those sources to see if they reconcile and what your differences are. You know, your sales documents are, you know, double check you're charging the right rate of tax. Do you have copies of invoices? If there's multiple invoices, they're electronic. You know, what do you got to do? How you got to get them to the auditor to review? You know, key area, resale and exemption certificates. I can't harp on it enough with my clients, is to make sure that they're maintaining these documents. If you don't have a resale and exemption certificate, it's going to likely be considered a taxable sale unless you can provide it. Now, auditors are typically nice about letting you provide certificates after the fact, but Caitlin, I'm sure there's situations where that's not going to fly either. But for the most part, you guys are pretty lenient about that,
Yeah.
I think.
If you can get the certificates at some point
Yeah.
during the audit, usually those are accepted.
Yeah, so that's great, but what if your client, you're making sales, your customer went out of business? That you're stuck. I've seen that happen before, where a customer was gone. We had a customer who sold forklifts to Circuit City. Circuit City went out of business, and there was nothing we could do at that point. But very important to maintain those documents. And then on the other side, the purchases, your fixed assets. Hey, get your depreciation schedule out, match it up to what's been reported on your income tax return, pull those invoices. They're going to want to look at those in detail typically because of the dollar amount, to see what they are. Your payables, typically they're going to want to look at expense purchases, stuff that's in the trial balance. How do you have those files? Are they all on paper? Most companies now, maybe everything's electronic. How do you access that stuff to be able to show the auditor what's going on? Your use tax accrual documentation. I think this is always something, I think the auditors, maybe they're not looking for this when they're identifying audits, but I think it's probably pops out real quick. If you're not accruing use tax, it's probably an issue that, the state's going to want to look at.
Or if you are accruing it and it's not being reported on your return.
Yeah, that's a problem too. And then, if the auditor needs you to provide general ledger or accounts payable data, how do we get that? Who do we talk to in IT to export that? Is it coming from a QuickBooks or maybe your ERP system? How do we go about getting that file so it's a workable document? And then I think lastly, I would check prior audits. If you've been audited in the past, especially, the prior cycle, the prior 3 years, did you make those corrections that may have came up? Because I think that's one of the first things an auditor is going to look at to see that you fixed the prior problems. So just some stuff to think about when you're, looking at your audit, from the information, perspective, but then also, what's your game plan for managing this audit moving forward? I think the best thing would be is to have a point person on your team that's going to work directly with the auditor and be their main contact person. We do that a lot for our clients as well, where, the audit's mostly handled off-site, and we're kind of the main person that's running between the taxpayer and the auditor. A lot of business owners like that. They'd rather have somebody else deal with it. This way their folks can focus on what their tasks and what they're good at internally, and not trying to run around with this tax auditor, because it's going to take time. It's going to take time from that person away from their regular duties. So that's something to definitely think about. How are you going to supplement that person? Who's going to provide all the information? So, the other thing is too, if you have the auditors coming on site, what are your policies, especially post-COVID? A lot of things have changed. What are your policies for having an auditor on site? Where are you going to put them? A lot of clients I had back in the day, the auditor went in the basement where it was cold and dank. Caitlin's laughing because I'm sure she has some stories about, being tossed into some room like that. But, you don't want to do that. You want to have set up a good working relationship with the auditor. Where are you going to put them though? What kind of access do they have to documents? If you have stuff in file cabinets, you don't want them flipping through everything. You don't want them hanging around by a copy machine where they might, overhear stuff that you don't want them to hear. It's just not meant for them to hear. So you got to figure out a good workspace, how they're going to contact you during the course of the day. Just stuff like that. Wouldn't you say, Kayla, that stuff you guys talk about with a taxpayer when you guys get out there?
Yeah, that's stuff that is usually talked about beforehand, like on the phone when we set up a meeting.
What do you guys prefer? What's the state's preference these days? Is to still come on site more or handle stuff remotely?
Actually, since COVID, it's been a lot more remote. And that's actually kind of the taxpayers' preferences as well, because if you think about how COVID has changed things, and a lot of businesses are just more remote in general, they're getting rid of office spaces. And so there's less places to actually physically meet. So a lot of them are preferring to conduct the audit electronically, and the state is on board with that as well, because travel is expensive and time consuming, and if we could spend more time focusing on the actual audit work with the taxpayers, that would be more beneficial to everybody.
It's good. Yeah, it's all, and we've seen that too. So it's definitely things have changed in the last few years. But, I think at this point, you've prepared your documentation, you've looked at it, you probably have a good idea of maybe whether or not there's some issues out there and some potential liability. So it's time to really think about, okay, what am I going to consider acceptable here? There's going to be a small assessment, maybe there's some big issues, maybe you need some outside help at that point to kind of evaluate that. But, you're going to be kind of handing everything over to the auditor shortly. You want to really have a good idea of where you think this is going to fall. And then just some other issues to consider on the next slide. I mean, things that you deal with over the course of an audit, waivers. A waiver is typically basically a document that allows the state to kind of extend the statute of limitations, to kind of give them more time to review the audit, but it also works the other way too, where, may give you more time, to provide some information and to provide some documentation. And I think, I know from my perspective, I'm always ready, willing to give an auditor a waiver first go around. If things are going well, everyone's working as best they can. Sometimes it just takes time. So, always willing to extend that statute, if it makes sense. The other thing, we didn't really talk about this, but, sometimes if you have a large chunk of data, it's auditors not gonna be able to look at everything. They're gonna want to sample. And maybe they're going to sample a quarter, like kind of a block sample, and look at everything for one quarter and then project those results across the audit period. If you're a big company and you have thousands and thousands of purchases or sales, they might look at a stat sample, and I think, Caitlin, you guys there's somebody in Albany who runs the stat sampling.
Yep.
And, New York's really good at it. They're probably the best state at stat sampling out there, given their procedures and how they do it. But with that, there's a certain amount of number of records per strata, right, that have to get pulled.
Yes. So they'll do a statistical analysis on your data to see where it makes sense to break the transactions into dollar amount ranges, and then figure out, how many within each of those ranges do we need to look at to have a statistically valid sample, basically. And depending on the amount of your records, it could be anywhere from a few hundred to a couple thousand.
Yeah, so it's something you really need to consider, before, agreeing to, what does that mean? How many documents am I gonna have to pull? What does it mean if I can't find one? So, definitely something to consider. The other thing I think a lot of people miss is overlapping audits. Caitlin, what can you tell me about like an overlapping audit? I know we were talking about this, and we had different ideas of what that meant. But in my case, what happens if you can provide documentation that maybe your customer was audited for the same time period or your supplier was audited?
Yeah, so basically there's two parties to each sale. So there's the seller and the purchaser. And if on the audit, say you're the purchaser and the auditor is looking at your purchase invoices to see if you paid tax when you bought whatever it is that you had bought. and they find that you didn't. So they say that you owe this tax now. Well, if the seller was audited for that same period, they can provide you a copy of their audit verification letter that shows which periods the state looked at. And that can actually relieve you of the liability of having to pay tax on those invoices if the person that sold them to you was already audited for that same period.
Yeah, I mean, I think that's kind of often overlooked. You know, it does take some work. And I mean, I don't think it's something it's possibly worth doing for every transaction.
Right.
But if you've got a large chunk of transactions from one customer or one, you know, vendor, then I think definitely you want to, you know, take a look at that. So, especially if you have a good relationship with them and they can provide that documentation, and definitely worthwhile. And then, you know, finally too, you know, do you have any overpayments? You know, you've reviewed your documentation. Did you maybe pay some sales tax on machinery and equipment you use in production? You know, was there an issue with computer software that maybe you're using in multiple states that you can kind of parse out the tax due on it? So you want to look at that, kind of get an idea if you have any overpayments as well that could potentially offset any potential liability. So just some things to think about as you're, you know, finalizing your preparations for the audit. And then eventually, you know, the auditor's got to come. Caitlin, you know, her old role will be knocking on your door. And then, you know, what happens, Caitlin? Kind of like that startup, that opening conference.
Okay, so after you've received the information about the audit and you've done your own like little review to see where you think you might stand, you'll meet with the auditor for the opening conference. So the person that prepares the sales tax returns, as well as management or owners, should attend this meeting. The auditor will go over the audit process and review your taxpayer rights with you. When I say taxpayer rights, I mean what are you able to do if you don't agree with the audit process or with the audit results? We'll get into that a little bit later, but also during this meeting, you'll talk about how the records are going to be reviewed, whether that be the block sampling or the statistical sampling, and then you can talk about time frame for the audit. What are the expectations on how long each piece is going to take? And then also, this is a good time to ask questions to the auditor about anything that you might be wondering, like what are we going to be looking at? How are we going to be looking at it? That type of thing. And I know that it can be a little bit scary to be audited. It may seem even like it's a little bit like an attack on your business, but in reality, most businesses will get audited at some point. So it's important to try and maintain a good rapport and open communication with the auditor. It may help the process go a bit smoother. While it's not likely to change the outcome of the audit, it can help when it comes to things like if you needed a little bit more time to provide something that has been asked for, or when it comes to the end of the audit and you want to request waiving of the penalties. It's things like that that open communication and a good rapport will help with.
No, that's great. That's some great insight as to how, you know, that goes and what the auditors are potentially thinking when they're out there. So, you know, we go from the opening conference to, you know, you're working with the auditor might be out there for a few days for field work or whatever, depending, you know, how the audit is being conducted. And then, you know, the one thing that I think is a big part of the audit is, especially if you're a manufacturer, I mean, the auditor's got to want to see your facility. They're going to see your production operations, you know, mainly because there's a lot of sales and use tax exemptions related to manufacturing and production. And we're going to want to make sure that, you know, what you're claiming is exempt is actually exempt. It's within the production process as outlined in the tax law. So I always like to, you know, go out, take a look at the facility, get a tour from whomever I mean, depending on the company, the size of the company, the nature of the production operations, it could be the owner, could be a production manager, could be an engineer, sometimes the tax people, but they usually just come along for the ride, the tax and accounting people there to kind of get an idea of what's going on too. But, you know, you want to kind of walk through that process, that production process from start to finish, and, you know, get an idea of making sure you're claiming exemptions in the right areas. You're not, you know, you're paying tax on warehousing, or you're paying tax on anything, you know, prior to the start of production. You know, I like to go with the person who's going to give that tour, you know, and ask my questions. And, you know, this way, the day the auditor comes out, I can kind of just hang back and kind of listen to see if the auditor has any questions on stuff. And then you always got to watch, you know, everyone's always proud of what they do and showing off their facility and the cool machinery and equipment and what it does. You know, sometimes people like to talk a little too much maybe about stuff. So I kind of like to hang back and kind of be there in eye line of whoever's giving the tour, and so I can wave them down or give them a look like, all right, move on, stop talking, or don't answer that question, you know, we'll follow up, that kind of thing. So you just got to be careful, because once you tell an auditor one thing, you know, maybe it's not 100% right or 100% accurate, they're going to have that in their mind, right? Like anyone else. And then if you're changing up your answers down the road, you know, they're going to start calling some of what maybe you told them in a question. You're smiling like that's happened before. But yeah, you just want to be careful. Be careful of managing questions and information in the document requests. You know, be careful of what you say, how you explain something. You know, there's no harm in telling an auditor, look, I have to follow up. You know, let me get back to you on that. Let me, you know, make sure we have your facts straight. Make sure you talk to whoever the pertinent person is, you know, before you're providing answers that may not be 100% accurate. You know, auditors are great about, you know, they're all pretty good about giving people time to respond.
Yeah, and it's best not to guess if you don't know the answer anyways, because these auditors are going out to, you know, do all these audits of different businesses and industries, and they can't be an expert on every single one of them that they go out to. And so a lot of what they're relying on, information about your business operations and just the industry in general, is coming from you. So if you don't know the answer, it's totally okay to be like, let me find out for sure before I get back to you.
No, that's great. And so, you know, after this, you know, the auditor is going to be out there, they're going to do some field work, might be a few weeks, but you're going to get like a preliminary assessment at some point, you know, what the auditor thinks is taxable. There might be some stuff for you to follow up on there, some of the exceptions you're going to want to look at. You know, whether it's sales that maybe you didn't have an exemption document for, or a purchase that, you know, you didn't accrue use tax on, there was no tax charge, and is it really used in production, or is it just, hey, you know, we missed it? So you want to kind of prioritize those exceptions by, you know, the dollar amount, especially if you're in a sample, you know, environment where you have that kind of potential projection. You want to focus on those items that can lead to, you know, the most tax for you that might be assessed depending on how it's projected. You know, you have some time. Yep. No?
I was just going to add that sometimes the items that appear on the preliminary work papers may have resulted from questions. Like maybe the information wasn't completely clear on what was being sold on the invoice, or what was being purchased, or how it was used. And it might be more of a question rather than like a definite, you owe tax on this. I mean, if you ended up not being able to answer the questions, it could end up being more in the definitely you owe tax category. But at this point, there could be just, you know, questions that need to be answered.
Yep. And that's why I think it's important to, you know, have that communication with the auditor about it and ask them, like, you know, is this like locked in stone, or is this something that, you know, you just need some more info for? And I think most of the time with a preliminary assessment, it really needs more information. I mean, something's not clear. So, you know, definitely want to, you know, work at that point to try to resolve as best you can. I mean, I do put on here, consider contacting the auditor supervisor or team leader in assistance resolving an issue. I'm typically not a huge fan of doing that. I mean, I like to try to work things out with the auditor. I don't like going over someone's head. Nobody really appreciates that. I mean, if it's an issue, like a real issue, and you're not getting anywhere, and then, yeah, I think, you have that contact information and the appointment letter, then it might be worth, doing that, or asking the auditor, hey, look, I'd like to talk to your team leader with you, and, to see if we could work this out, because we're not communicating well with each other here. Maybe I'm not understanding your question, maybe you're not understanding mine and my response, so always good. But, it's really important to know you may not be able to resolve the issue. You might think one thing, the auditor and the state's got to think another. So you may not get everything resolved to your satisfaction during the course of an audit. And we're going to talk about what your options are after that. But I'd like Caitlin just to talk about like the exit conference and, what happens, once you're officially assessed. How does that process go?
Sure. So after you've kind of gone back and forth on the preliminary work papers, the auditor will issue a statement of proposed audit change, and that's essentially the bill. So it will show the tax that you owe plus the interest and penalties. At this point, you should consider whether you agree or disagree with the results. You may want to write a penalty abatement letter asking for the penalties to be removed from the bill. You would have to just, explain that there was reasonable cause for not remitting the tax that you were supposed to. Payment should also be considered at this point. If you agree, you can pay and sign off on the audit results and waive your rights to protest any further. If you agree and you can't pay in full, you can also request a payment plan, which we'll get into in a little bit more detail in a minute. You can also decide if you want to disagree with the results, and then you would decide how you want to proceed with protesting the results, which is another slide for later on.
Yeah, and Caitlin too, I think it's important to point out that you may agree with a part of the audit, and there might be one issue you disagree with.
Yep.
So you can, the auditors will give you 2 AU 346s too. I've seen that before, where if you're going to agree, you can pay the piece you agree to, get that out, get that done with, and wipe it out, and then just have the dollars that you're disagreeing to on a separate.
Yeah, and that can be true for different tax areas. Like say you agree with the tax that was assessed on the sales audit area, but you disagree with expenses, you can have it split onto 2 separate bills. You can, if you can't come to an agreement on penalty, you can also have that split out onto a separate AU346.
Good, yeah. I think everyone's pretty flexible with that. And the state's great. You can, send a check in with the AU346. You can pay online, take care of it, and then, you're kind of good at that point. We talked about payment issues briefly. So if you are in a position where you may not be able to pay that tax bill in full, especially if maybe it's a large assessment, you may qualify for something called an installment payment agreement, an IPA, where you really just make monthly payments towards the unpaid tax balance for typically a 2 or 3 year period of time is what the state will typically accept without a lot of work, especially if your balance is less than $20,000. It's not guaranteed. They are going to look at your financial circumstances, your facts, your circumstances. Maybe they want to see some financial documents as well. You have to contact, and you're not going to do that with the auditor. You're going to contact a separate phone number to request an IPA. The auditor, once they issue that assessment, that's kind of that. The payment, is going to be another issue there. So, and you really need to consider that because, you do have a lot of potential interest. The interest is going to still accrue as you're working this payment off. So, you want to watch what you're doing because, you might be able to get what we were talking about earlier.
Yeah, it's actually a good idea to kind of review all of your options and see if securing your own financing outside of the state's payment plan may be beneficial as well. Sometimes, depending on your financial situation, sometimes private financing can offer better terms of repayment or interest rates than what the state is offering.
Yeah, because especially too, if you don't adhere to those terms and conditions, yeah, you're gonna have a major collection issue from the state, and they don't mess around when it comes to that point. When those folks start coming out, the collection people or the enforcement people, you got a problem.
In fact, like your other tax types as well.
Mm-hmm. Yeah, 100%. Yeah, it's definitely not just a sales tax issue. So, but the information's here. If you have questions about that, we can always talk. But if you can settle it a different way, it's probably for the best than going through an IPA. So, appeal options. Maybe there is an issue that you don't agree with on the audit, or you can't come to a resolution, or maybe you just needed some more time to get something. You do have an option to appeal. Typically, it's 90 days from the notice of determination comes out.
Yes.
After the AU 346, you might pay your audit bill, but then you get another statement called the notice of determination. And if you've already paid, it's typically zero, but it really just kind of sets forth your terms. It's like your statute date for appeal. So you'll have 90 days from that date of the notice of determination to do one of two things, which we'll talk about in a minute. But really, you got to consider, is this something that can be easily resolved? Maybe I can take this to the next level, the Bureau of Conciliation and Mediation Services, and we can work through it. Maybe the auditor and I can kind of work through it yet, before we appeal. And obviously, you want to look at the dollar amount, dollar amounts of, what's a large dollar amount to appeal is different for different people and different businesses. But, is it worth the effort, the time, the cost that might, go into this, and sometimes, yeah, it is, just because it might impact your industry, it might impact your business down the road as well. Again, at this point, you may want to consider outside tax or legal counsel. That's going to come with a fee. So there's a lot of stuff, the cost benefit of appealing versus paying the tax, really need to weigh. And again, a lot of times you can maybe easily, handle an appeal with, at the next stage. Or I think sometimes I've done it before too, where we've appealed, but the auditor and I have worked it out beforehand. And I think that's the nice thing about the appeal process. The first level, you really have two options after an audit. You can go to this Bureau of Conciliation and Mediation Services, the BCMS. And BCMS is really just kind of a meeting with the auditor and a third party arbitrator who happens to be employed by the state, but whatever. They're not biased in any way whatsoever, but they're pretty good. And you meet with them, you kind of both explain your facts and circumstances. And, from what I've seen lately, like the conferee at the BCMS is really looking for the auditor and the taxpayer comes to some kind of resolution, some kind of negotiation, some kind of settlement that works for both people. And I think, the auditors are kind of willing to settle at this point as well, just to avoid this carrying on. Because, think about it. If you wait 90 days to appeal, that's 3 months. I think the last one I did took about a year. before we got even a date set, and that date was another couple months down the road. So you're talking maybe a year and a half before you're even sitting down with the auditor. So, and you can still work with the auditor during that time period, kind of informally, to get a resolution. But BCMS gives you more time to kind of handle this in a kind of an informal way. It definitely makes sense, because the other option is you can go directly to the Division of Taxation Appeals, DTA, and you would go to the administrative law judge. And ALJ hearings are almost a very formal court-type proceeding where the state's attorney is going to be representing the state, and then you, in my opinion, would want to have your own attorney who's very familiar with how this process works, representing you. So I think it's a good option to go through and check, with this process. And I'm going to show you, if you go here on the next slide, kind of a visualization of how this works. Because you have your audit, like I said, most people go to BCMS, but you can't go straight to the administrative law judge. After the administrative law judge, you're going to go to the second stage of appeals in the DTA, and that's before the tribunal, the tax appeals tribunal. Are they in Schenectady, or are they in Albany?
I think it's in Albany.
In Albany. And at that point, that's the last administrative level of appeal you can take. And I think the state can't appeal a tribunal decision, or they might have just changed that. I don't remember for sure. But I think that was in the legislation last time around, in the last bill, that the state can now appeal a tribunal decision. I got to check that. After that, you've got to go to judicial review. So after that level, you have to go up to the, appellate court, in New York, third department. And it's basically just like a state court level of contention. So you can imagine, as you're continuing this progression of appeals, the dollars to do these appeals are going to be higher and higher and higher as you have attorneys and witnesses and everything else. So, if you can really work an issue out at the lower levels, it's going to save you a lot of money. I mean, it really needs to be, I think, an issue, a significant issue, a lot of dollars if you're getting this high. If you can't resolve with the third department, you can always go to the New York Court of Appeals. And at that point, if it's a constitutional issue, you would go to the Supreme Court of the United States, which we've seen with sales taxes happen here and there. So it's not out of the question. So that's really just the talk of the appeals process, and we're starting to run low on time. We've got about 4 slides left here. So really, we talked about this on the outset that, an audit, yeah, it stinks, right? You may have to owe some money, it's gonna be some work, but it doesn't provide you an opportunity to improve your compliance. And really something you should, take seriously. If you have, depending whether maybe you have a small assessment, maybe you have a large assessment, there's things you can do. Maybe you have a small assessment, a few dollars here and there, maybe it's worth, having periodic meetings internally to review some tax law changes or administrative guidance that came out. Maybe you have an internal tax guide that you haven't updated in a long time. Maybe, doing that, or even, looking at high dollar transactions. Maybe AP people, if they see a big item, you purchased and there's no tax on it, well, maybe it's worth talking about, run it up the chain, talk to some outside, counsel, is this something we need to accrue use tax on? So those are some things to do if you have some small compliance issues. On the other hand, if, maybe your issues are big, maybe you got really dinged on an audit. So, what do you do in that case? Maybe you really need some internal controls. Maybe there needs to be a process around preparing returns, reviewing purchase transactions for use tax. Some real good internal controls need to be set up. maybe you just don't have the folks in house. Maybe you want to outsource the return prep. Maybe you want to outsource your prac department. Have somebody on the outside looking at your purchases every month. I mean, we do that for a number of companies, I think. Maybe it's time to kind of get into tax technology, for some automation. Maybe having an outsourced Avalara or TaxJar or Vertex to prepare the returns, or kind of build some functionality into that would help you. So yeah, there's a lot of things you can do, I mean, to really improve your compliance. But I think you have to look at it as an opportunity to improve, because if it was especially a big assessment, they're coming back and they're going to look to see if you made any changes. Because at that point, I think we're talking penalties then too, right?
Yes, if you haven't corrected it, it's not good if you were to get audited again. And I mean, basically, if you've discovered an error either as a result of the audit, or maybe you're looking at everything and your procedures after the audit, if you discover an error that you've made, it's better to be proactive. There's different ways of correcting it, but depending on your business, whether that would be doing a voluntary disclosure or filing back returns, amending returns, it depends on the individual situation, but definitely doing something about it is better than just sitting on it and ignoring it and waiting for the state to come back and audit you.
For sure. So we've got a couple of minutes left. We have 2 slides left about other issues. I think, Caitlin, pick one here that jumps out to you, and I'll pick one too then.
Economic nexus.
Okay.
That is something that is really an issue right now, especially because of the Wayfair decision that came out recently. A lot of times before, states weren't required to register and collect sales tax if they didn't have a physical presence in that state. Like if they didn't have an actual location or actual salespeople, it wasn't required. But now, because so many sales are online, that has changed in most all of the states, that if you are over a certain number of sales or a certain dollar amount of sales, that qualifies you and requires you to register and collect sales tax.
Huge issue. Yeah, since the Wayfair decision in 2018, it's been a lot of compliance work, helping companies with that. And I think to piggyback off of that, I'm going to still pick my own, but to piggyback off that, I think one of the issues with economic nexus is marketplaces. The states were smart. They applied this over $100,000 threshold to get the remote sellers. But then if you were under $100,000, you typically have to register. But you may have been selling on Amazon or Walmart or eBay. So they made those guys collect the tax on your behalf on these marketplaces. Well, what we're starting to see, especially in New York, a lot of online companies starting to get audited, who sell online, sell on the marketplaces. And, the one big thing we're seeing is they're not reporting their marketplace sales. Yeah, you're not collecting or paying that tax, but New York still wants to see that sale on your return. You start your gross sales are all your sales. You put the marketplace sales as resale, and because it's hard to reconcile. We talked about reconciling. If you don't have the return right and you're not reporting those, and then it's also getting that data, getting that sales data from Amazon, from Walmart, from eBay, it's a lot of work to really reconcile. So something to really think about if you're in that line of business. And then I'm going to talk about real quick my gray issue, computer software. It's always been a gray issue as far back as I can remember. Doing this. So there was computer software when I started working 25 years ago. So, the states have changed their rules. It's not just, nobody buys software on a disk anymore, or, anything like that, or a CD. I mean, even downloading software has really kind of gone away. Everything is software as a service. So you're accessing everything online, and you may be anywhere in the country or the world doing that. How is that taxed? And I think states have different rules, especially how they're taxing SaaS versus the other types of software and digital products and sale services. So that to me is a huge issue. It's very gray even to this day. And I think that's something a lot of businesses kind of, have issues with. So, but I think at this point, Carolyn, we're out of time. So we could probably do a webinar, Caitlin, just on the potential issues. And that could be an hour of just discussing that.
It was hard to limit it.
Yeah.
And not to get into too much detail on
No.
any of the areas.
Definitely not. But Carolyn, do we have any questions from anybody or?
Well, I just want to point out real quick, everybody's contact information is on the slide for you if you want to reach out to Tom or Caitlin directly or give them a call. They are here for you. Again, in that survey that will be going out immediately after, you can select to have a follow-up meeting or talk with somebody in our traditional audit and tax departments. If that's where your question is, just let us know and we'll coordinate that for you. Just want to touch base real quick before everybody jumps off. Our next webinar for April will be on the 9th. And we will have our mergers and acquisition team with us, and we're going to be talking about 8 ways out. So information will be coming out shortly on that. So feel free to join us, and you will be seeing the invite in your email box from me. So just want to thank everybody for joining us today, and I will get a copy of the slides and the recorded presentation out to you this afternoon. Anything you want to add, guys, before we end it?
No, I just say, don't feel like you have to go alone if you're having issues on an audit. Give us a call. We can talk you through it, help you out with whatever you need. So
great. Thank you both for your expertise today, and thank you for joining us. Have a great afternoon.